so far we've talked about the dot-com bust that followed the dot-com boom, because we want to come to grips with asset inflations. Just talking about the real estate boom of 2002, 2003, 2004 wasn't enough. What about the stock market boom? And if we're going to talk about the stock market boom of 2003, 2004, 2005, what about the big stock market boom of the dot-com years that preceded it in the late 90s? Well, we took a look at that and we said the hallmark of that boom was the fact that the stock market rose more rapidly than earnings, driving the price-earnings ratio up. So we have to ask ourselves this question: why did the stock market, why did the asset value, the stocks, grow so much more rapidly than the earnings of those companies? And the answer was that investors expected profits to rise even more rapidly in the future. Why? Because of the new economy. And the new economy was supposed to lead to blue skies forever. Now, what does that mean? That meant that advancing efficiency, advancing productivity, advancing output per unit of input, advancing output per hour, all those synonyms would lead to higher profits in the future. But it didn't work that way. Take a look at chart 2.1, as I am doing now. And I'm moving my cursor around, and of course, recent profits are obscured. Recent profits obscure what happened in the 1990s. So, but don't let that scale throw you off. You can clearly see that around 1997, profits began to shrink and they never really recovered. So you can tell that the astute observer could have foreseen that something was wrong. Just as the astute observer in 2006, 2007, when real estate prices began to collapse and new home sales began to collapse, just as that astute observer had an inkling of the recession that was going to come in 2008, 2009, the astute investor could have taken a look at this chart, after-tax corporate profits, and seen for himself or herself that profits were no longer growing in the late 90s, and that, of course, was a sign, an omen of trouble ahead, and that the stock market was sure to collapse very, very soon. And as it turned out, by 2001, it was certainly heading south. So our next job is to focus in on this and try to dissect the collapse in profits, the cause for that, and thus the ultimate cause for the dot-com bust.